Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Andy Duncan, and the CFO, Charlie Glavin from Boardwalktech Software for an update. Boardwalktech trades on the TSX Venture Exchange under the symbol BWLK and on the OTC under BWLKF. The company is currently trading at 79 cents with roughly 44 million shares outstanding, or about a $35 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Yeah, great to have Andy back. Andy, I think last time we spoke was about a year ago. So most of our audience has a general idea of what Boardwalktech is all about. But before we get into sort of the formal update, why don't you refresh those that are hearing the story for the first time, refresh everybody's memory and let those new individuals know what Boardwalk is all about.
Sure, Paul. Thanks very much for inviting us, and we're honored to be back on after a year. Let's make sure it's not too long on the next one, huh? Yeah. So Boardwalk, we're based in Silicon Valley. We've also got an operation in Mumbai, India, and we focus on information management for large organizations. And if I can use a kind of a slide here, I think that this particular slide really kind of tells what we do as I kind of refresh your audience. So after a lot of years of spending by large enterprises on enterprise software like Oracle and SAP and Salesforce.com, what we find is that most of these companies are basically still running their organizations on Microsoft Excel. And Excel is the number one analytics engine that's out there. And what we find is that people start to collect data from different places in the organization. They put it into Excel, they start to email the Excel around, they start to write formulas. And before you know it, Paul, the kind of the system of record ends up being Microsoft Excel. And within these large enterprises today, they'll have anywhere from 100 to 1,000 of these, what we call mission critical spreadsheet processes. So Boardwalk delivered and runs this in a SaaS environment, the Boardwalk Digital Ledger. And it's a platform that allows us to be able to absorb these spreadsheets into our platform and create an enterprise application with history, compliance, security, and improved business results by being able to manage the data in an enterprise system on a database as opposed to in Excel. So our business is, we work with large companies to say, you've got 100 or 1,000 of these Excel spreadsheets. They need to be converted over into an enterprise application. Let's get started. And we charge money on an annual basis for them on a right to access basis, to utilize our platform to be able to make that happen. We have large companies today, including Apple, Verizon Wireless, General Mills, very large companies where we focus. A lot of our energy is focused in the supply chain. There's a lot of companies out there that when you've got inventory risk, there's a real issue with, and there's always a lot of spreadsheets that are running around. And our system can really help people not only streamline a lot of the processes, but also get them to decisions faster, which can really drive results. Any further questions, Paul, on that?
Oh, okay, good. No, I think I fully understand that part. Yeah.
Yeah. Mm-hmm. So this is the focus that we have. When you look at Excel, by the way, within the enterprise, there's about 1.1 billion users in the world that use Excel. It is the number one business application that's out there. And in fact, if we go back to the history of the kind of PC age, the first application on any PC ever was VisiCalc, which was a spreadsheet application and the precursor to Microsoft Excel. And so it really has become the de facto standard of, people aggregating data into these Excel spreadsheets to make decisions. And the problem that we see in the enterprise is that the information is growing so fast, right? Information in the enterprise is basically doubling every 2 years. And about 80% of that information is what we call unstructured data, which means that their spreadsheets and their documents and their HTML. And managing all of that unstructured data in an enterprise is really hard. And the Boardwalk Digital Ledger platform allows for a company to really provide a platform for their employees to significantly improve the way in which they do business. We recently won a large contract with one of the top 5 banks in the world to help them convert about tens of thousands of these spreadsheets over onto our platform. And as we were initially rolling this, the first piece of it out in test mode, we interviewed a lot of the users. And one of the users came back, a senior director, and said, what used to take me 2 days to aggregate all of this data in these spreadsheets now takes me 15 minutes with Boardwalk. And that was a pretty astounding, piece of information that came back of not only are we doing this in the bank to help them with regard to compliance and security, but the added value of being able to get 2 days back of your life every week by not having to spend 2 days aggregating all of this data and having it done automatically for you in 15 minutes is a pretty strong testament to the value proposition that we're delivering into the market today. So when you look at the financials with regard to Boardwalk, we normally charge anywhere from $75,000 to $100,000 to get started with a company. Once we get into a company, we start to expand across that company. We call that our land and expand strategy. You've seen recent press releases that we've come out with, including this week, about this land and expand strategy, where we'll get started and then we start to build the revenue within a company on an ARR basis as we continue to deliver more value and continue to convert more of these Excel spreadsheets onto our digital ledger platform. So today, from a financial standpoint, we provided guidance in June for the first time to our investors. That guidance that we came out with was between 6.5 and 7 million, of which about 5 of that is ARR. And we're actually, when we came out with our first quarter earnings call, we advised that we were trending toward the higher end of that number and that our ARR was actually now over 6 million. So we're really starting to see some growth, and we really believe that we are at an inflection point as a company with not only this increasing revenue and increasing ARR, but also we're certainly tracking to move to EBITDA positive environment in the very near future. We're not out looking for any money currently. We've got enough cash on the balance sheet to be able to support the growth of the company going forward. And we're actually feeling quite bullish about where we are, and not only in the market today, but also where we are with regard to pipeline and the focus of the company as we execute to bring on more customers and drive that ARR. Charlie and I wake up every morning, and first thing we start talking about is how do we increase that ARR. So it's a very exciting time, and again, sincerely, we're at an inflection point with the company.
Fantastic. What is driving the growth? Like it does seem like the last couple of quarters, revenue growth has picked up. What do you see as driving that? Is there more marketing and salespeople? Is there something else that's happened within the industry that's allowed you to be able to grow faster?
Yeah, it's a great question, Paul. So we certainly are adding on additional salespeople. We're running kind of that fine line of trying to get to profitability, but also not not getting to profitability to harm any of our growth. So we are spending money mainly on sales and marketing. I would say that there's a couple things driving this. One is certainly as we're starting to come out of the COVID, more and more people are working remotely, and our system is a great solution that really helps people be able to collaborate better and make better, faster decisions. And this, remote working has actually helped us, right? Think of all the email spreadsheets that you used to email around. And now with Boardwalk, you simply hit submit refresh, and we capture the data in your spreadsheet, move it to the server, and then everyone else that's working on that at the same time can see your changes. And so we really do kind of foster, if you will, this remote collaboration, which has been really good. I think the second thing is that a lot of companies are pretty frustrated, again, coming out of the COVID, with some of their core transactional systems of record. They just weren't flexible enough, and they found that we ran into this, this big issue. Now we're running into inflation. The world is changing pretty quickly, and these back-end systems that are built on this rigid, data structures is really hard to change. I mean, we literally would sit down with companies and they would say, I want to run a query and to be able to say, how much inventory do I have in my 8 distribution centers for a particular product in Europe? And they literally would have to submit a written request to their IT department, who would have to handwrite a query to be able to come back and provide that information. Now, how do you make a decision about a stock out and meet that need if you've got to wait for 3 days for some, someone to write a query to tell you what your inventory is? That's information should be at your fingertips. And the Boardwalk system allows you to be able to have information like that so that you can make decisions faster and improve certainly the results of the business, whether that's from a margin standpoint, whether that's from a sales standpoint. There's a lot of operational value that comes from getting everybody on the same page at the same time and being able to see the history of what's happened, being able to get to this information faster, right? Information is going to be the, kind of the new fuel of the enterprise going forward, right? He who has the best information fastest is the one that's going to be able to make the decision faster, and is the one that's going to win in the end, right? It's these laggards that have got issues. And again, when you peel the onion back and you look at all of these companies today, I mean, imagine a top 5 bank in the world that has got, tens of thousands of spreadsheets running basically the back office of the bank, right? I mean, you've got to get control of these, not only from a compliance and security standpoint, but from an improvement of process standpoint, to be able to make decisions faster. And this is key. So this is what we're seeing, Paul, is this real desire by these enterprises to enable a digital environment. And if you look at all the money that they've spent on technology, the last kind of mile, if you will, are all of these spreadsheets that are running around the enterprise that need to be moved into a digital environment. And that's exactly what the Boardwalk Digital Ledger does. And it's very unique technology. We got a bunch of patents on this technology. There really isn't anything out there from a competitive standpoint that can do exactly what we do. So we are in full-blown execution mode right now, and really grabbing at the ring, if you will, to grow our user base, our customer base, just as quickly as we can. And we're seeing a lot of positive movement going on.
Paul, if I could add on,
Please.
Since we've launched the model and the business model in 2018, the business is actually of customers who we've signed on to contracts since 2018 have actually been growing closer to a 45% CAGR. So part of that is we had legacy contracts, when we were doing more the proof of concept. You have 2 choices. And so in 2018, do you do an end of life and you write them off, or do you migrate them? And the important thing about this is where we are right now isn't just a matter of new direct salespeople. We are getting legacy customers who are migrating over to recurring. We are getting customers who are referring to other customers. So it's not just direct. We are also teaming with partners where somebody may already have access into a customer. We do the license, they do the professional services work that needs scalability, better contribution margins as well. So it isn't so much that something recently has occurred as opposed to we're like the duck on the surface. We've been pedaling really hard and made a hell of a lot of progress. It's just that the headline numbers have become much more apparent. But the underlying referrals and the proof of this probably has been highlighted. So something that Andy alluded to is, we don't wish COVID, but the fact that it exposed a lot of people saying, you may have a good system, but it's not good enough. We're resolving supply chain, risk management, with banks, traceability, accountability, provenance. Number one factor by forced research with CIOs was they need better traceability. That's what the digital ledger provides, and in a unique fashion. Other people can do it on a journal or page version, but it's still fairly manual. Or think of it this way. We try to enable you to never have to attach an Excel spreadsheet to an email again, or do the dreaded save as. And that's because that single point of truth that our digital ledger provides.
That's fantastic. Yeah, I mean, the growth, like I said, the growth is pretty nice to see. Have you guys have you captured the low-hanging fruit, or is this something that's maintainable? You're growing at that sort of 40-50% pace top line. How long can you do that for?
Well, we think not only can we continue on this trend, Paul, but we can actually increase it significantly. So if you take a look at kind of the three core, go-to-market strategies that we have, is one, we're bringing on new logos. We just announced this week a new fabless semiconductor company in Silicon Valley called SI Times. Great customer, great first customer. They're doing wonderful. They've got all of this technology here, like is represented in the stack, but they didn't have anybody to really help them with all of their unstructured data and all of these spreadsheets that are bouncing around. And so in comes the Boardwalk Digital Ledger. So we're landing new logos. That's number one. Number two is we have this land and expand strategy where we're working with existing customers to continue to increase the revenue that we have from each of those customers. And I'll give you an example here of a great kind of case study. This happens to be a cosmetics company in New York that everybody knows who it is. It's one of the biggest in the world. We started in February 21 with our first installation or access to our platform, and the first application. This is all in the supply chain, by the way, starting at 85,000 a year ARR. A year later, we were already now 3 additional applications and 243,000 of ARR. And we believe that by February of 24, we will have that ARR for this particular company up to $1 million. So this is a great example of land and expand. You get in, you prove yourself, and then they say, and remember, each of these companies has got 100 or more of these mission critical spreadsheet applications that they've built. And they had to do that because there was no other way to solve the problem. Okay. And so you look at stuff that we're doing around like excess inventory. The ROI on us delivering excess inventory to this particular customer has been phenomenal. And they're like telling other companies about how we've been able to help them just by automating their management of their excess inventory, which, by the way, that application was delivered in a 6-week period. So this isn't Accenture with 50 guys coming in, sitting in your west wing of your office, and the project is supposed to be done in 6 months, and it's really gets done in 18 months, and it costs 3 times more than what it should have. This is about rapid application delivery on our low-code platform, where there's no code that's being written. We're just basically configuring their existing spreadsheet onto our platform to improve the way in which they exchange data. So that's the second thing that we're doing, is land and expand. So new logos, land and expand. And then the third thing that we're doing is, we landed this new bank, top 5 bank in the US world. The banking deal was brought to us by one of these large $10 billion IT services companies that works with the bank and works a lot of their back office stuff in India and around the world. And they came to us and they said, this bank has a problem. They've been penalized by the Office of the Comptroller of the Currency in the US, and they need a solution for all of their spreadsheets to be able to not only get them into compliance, but they also want to be able to improve the way in which their employees manage this data. So we were brought in. We thought the deal was going to be kind of small in one division, and we ended up landing an enterprise deal signed by the CIO and across the entire banking organization to solve this problem. And what we now have done, that we've landed this kind of showcase account, if you will, is we're now back out to all of the IT services companies that work with these banks. So think of, again, Accenture, Capgemini, Infosys, HCL, LTI, all the big firms. And we basically are educating them on what we've done with this other large bank and say, we know that all the other banks have got the same problem. And so we're starting to build a pipeline of bank prospects, utilizing the channel where the IT services company will do the professional services work. We will sign a contract directly with the bank to provide the platform/software. And from there, that'll keep our margins high, and that will also allow a win-win for the partner to bring us into the banks. So when you start to do the math on this and you go, okay, Andy, what did this bank pay you? And I'll tell you that it was, several $1 million on an annual recurring basis. And you go, well, wait a minute. If they got penalized and the Office of the Comptroller of the Currency is going to start to require this, and every bank has got all these spreadsheets that need to be brought into compliance, is it possible, Andy, that you could get 50 or 100 of these banks paying you a couple $1 million a year? And the answer is, heck yeah. And that's exactly where we're going. So go to market, new logos, mainly focused supply chain CPG, land and expand, driving revenue from our existing customer base, and using the channel to go after these banks, which is a brand new area for us, but utilizing our existing application. By the way, we didn't have to write a line of code to deliver the solution to this bank. Okay. Now we did turn it into a new product that we call Velocity, which is very focused just on the financial services. And we're very excited about the fact that our core technology out of the box solved this problem. So again, you start doing the math and you go, okay, so you can get $1 million from all these enterprise customers on an ARR basis, both by landing them and doing land and expand. You've got this banking channel that maybe you can get 100 of these guys in the next 36, 48 months at a couple million a piece. And you start doing the math and you go, wow, Boardwalk's got quite an opportunity ahead. And we do, and we're quite excited.
You mentioned margins. I mean, you're one of these great businesses where extremely high margins. I think last quarter you reported about 90% gross margin, profit margins. Is that something that's sustainable as well? And probably the bigger question is, at what revenue level does that really start to turn into profit at the bottom line?
Sure. Charlie, why don't you go ahead and take that? This is one of your favorite questions.
Yeah. So Paul, as much as the gross margins contribute a lot to our, we focus on the operating margin, in particular adjusted EBITDA overall, because ultimately that's cash and that's profitability. We haven't given an official guidance as far as profitability, but roughly between 7 and 8 million. What I would say is when we gave the guidance and in the conference call, I mentioned that our ARR at the time of our last quarter was at 5.1, but even from our conference call, we were already trending at or above the 6 million line. So we're on track to do this, and why we've stated in our release that we've been we're on track to hit the profitability. The one thing I would point out though is we've got a lot of growth opportunities at this point. We don't have to spend a lot of money on hiring new headcounts. overall. And if you look at our last quarter, we grew approximately 400,000 sequentially in revenue, but only 100,000 in OpEx. That sort of operating leverage is what investors should expect. Just because we're growing faster does not mean we're going to be spending faster as well. We understand that getting to profitability is not the end. It's just a line that you go through. And so this would be the other emphasis. But the other thing I want to emphasize to any investors is when we bring on a new customer, we're not hiring 20 new guys to load that up. That large bank, we had 7 guys, doing the training and other aspects. They will not be full-time 7 people. This is where bringing in a teaming partner who can bring in the transitory people can help. Plus, between having a lot of our employees in India and the cost structure, that is also a benefit. The other big one, as far as the gross margins, yes, we try to target in the 80s or high 80s, and we state that it's fluctuated. And yes, we were at 90%. I'm still looking for areas to cut the cost, and improve in terms of our hosting and other areas. But here's the simple, mathematical fact. You grow the revenue larger, gross margins have a leverage within it, because we don't have a high fixed asset base that we don't buy a lot of the servers. We utilize rack space and Azure, for that, depending on what the customer wants. So again, it's not a matter of we have to spend a lot of money mining or doing server farms overall. So pure and simple to your point, yes, those margins are sustainable. We will also share when we have savings with our customers. But the most important thing is that with growth, there is operating leverage in this, not just to get to profitability, but go well beyond to sustainability. And here's the other important factor, Paul, is to fund new tangential growth opportunities. So one of the things that attracted me to Andy when we first joined is there's a lot of areas that the digital ledger can be used, but Andy was judicious in terms of saying, don't chase every one of them. And even the banking, we did not chase the market. It came to us through referrals as well. The important thing about this is, as much as you're seeing growth right now, there are 3-4 different side-by-side markets that we would not have to invest that much, but we would need to put some in that could also accelerate our growth further. But as with our initial guidance, first things first. And that guidance was, this is what we can do without having to rely on conversion of our pipeline. The next areas will be that idea of growth in other areas, track and trace, pharmaceutical, semiconductors, other markets where the ledger does not have to be modified and we don't have to invest that much to get significant growth out of those tangential markets. So there's a lot more growth opportunity than just what we're providing today.
Certainly sounds like it. I love this slide because I think it answers almost every question I've got here on my piece of paper. So perfect timing. Okay, so you're sort of within sight of call it profitability or break even. Cash. What does your cash position look like to make sure you get there?
Yeah, so we had cash ending the last quarter, approximately 1.6, and we continued to bring in cash. I should point out our cash levels will fluctuate because we're annual renewals overall. So this isn't monthly subscriptions. These are non-refundable annual subscriptions, so there's a little bit of a lumpiness on it overall. But what we've told people is to achieve our initial goals and to achieve, getting to profitability, we don't have to do any additional financing. That doesn't mean that if we had additional working capital to get into those tangential areas, could be. But again, right now we do not have any need to raise money in order to achieve the goals that we've stated. But there's a lot more that could accelerate our growth as well, because as you've seen, Paul, with that growth, we are now getting referrals, reverse inquiry, where people say, we want to work with you. We've heard from others, you resolve problems, you increase productivity, you buy me time, the idea of instead of 2 days, 15 minutes, that's time. And there are very few things that I can see, including in a downturn, where you don't cut your way out to profitability, you increase productivity. And that's what our digital ledger provides.
Fantastic. What's the churn rate on your ARR customers?
So since 2018, we've had over 90% of our customers retain. overall. Pre-2018, I'll be really blunt, we had some perpetual licenses during the proof of concept. Well, by nature, a perpetual is not a recurring. So from the time that we started the SaaS model, we have over 90% retention. And that doesn't include in terms of the expansion within existing customers, which would essentially be NRR, so the net recurring. And that is part of that land expand. It's not just a matter of retaining, it's expanding within customers. One of our original large customer has actually tripled in size since 2018.
And you go, I guess now or going forward, where do you see the challenges in the business? What sort of keeps you up at night?
Well, certainly when we think about the opportunity that's ahead of us, it is quite exciting. I think we're in quite an interesting position, Paul, which it takes a little while to kind of get here, but because we're not raising any money, because we've got enough cash on the balance sheet, this is really about growing as quickly as we can and as appropriately as we can. We're certainly not going to hold back growth to get to profitability. We're going to really focus on that growth piece of it, but we're also have a real eye on getting to that EBITDA break even just as quickly as we can. So that's kind of what keeps me up at night. But the other thing that is interesting here is that this is a very leverageable model. Like from an ability to expand, I don't have to go out and hire a bunch of people like Charlie said. Like if I had 10 new banks that came on tomorrow, we would be able to handle that without an issue because of the way that we've set up not only the technology, but also the relationships that we have with the IT services firms that'll do a lot of the administrative and professional services work, of which there's not a lot, but there still is some, right? You think about managing 20,000 spreadsheets and converting them over onto a platform. You got to go division by division and train people and explain why this is happening. And so it's not just a free lunch. There's work to be done. And the IT services companies are perfect at that. So, it's why we'll be able to maintain our nice high gross margins between kind of 85 and 90% and really focus and be able to grow because of that model. On the other side of the business for the enterprise stuff, yeah, we're bringing on new salespeople and we're continuing to expand that and grow, especially as we're seeing demand increase. So there's not too much that's keeping me up at night, to tell you the truth. It's kind of trying to keep up with the demand on the time of the organization, and just trying to keep everybody focused on the eye on the prize, which is ARR every day, every 24 hours. How do we increase that? That's all we're about.
Mm-hmm. And I should have asked this question a little bit earlier, but you did touch on it a little bit. I imagine that the addressable market is massive for this type of application, but what's the more defined addressable market for you guys? What do you reasonably think you can do over the next, say, 5 years in terms of revenue for a business like this?
Well, I think that if you look at kind of I like to keep things simple with this, Paul. Mm-hmm. We think every enterprise, we can get to $1 million of ARR. Okay. How many enterprises out there in, call it the Fortune 1000, need us? Every single one, because every single one has spreadsheets that are sitting there that are mission critical to the business. On the banking side, kind of touched on this a little bit earlier. We believe that every bank is eventually going to need to move to a model of managing, securing, and getting their spreadsheets into compliance. As this becomes more and more critical to their business operation. And as that happens, you start to do the math and say, there's 3,500 banks in the United States, 4,000 banks in the United States. Some of them are little community banks and all that kind of stuff, but the big guys, of which there's 500-600, they're all going to need this, and they're all going to need to pay us several $1 million a year to be able to solve this problem, maybe more. So we really believe that we have almost an unlimited market where we've got something that every single enterprise is actually going to need. And it's a matter of picking off those early adopter markets where you've got a higher probability of winning the deal, a higher value proposition when you go in, and a bigger ROI, right? There's certainly some industries where they'll lag behind, but other industries where this is really going to be mission critical to their operation going forward. And one of those is banks. The other area is supply chain, and then within the supply chain, looking at CPG, looking at manufacturing. All of these companies who literally have had their world turned upside down with COVID and now inflation and all of the world pressures that are out there. And our solution adds this flexibility and rapid delivery that allows them to, much faster than anything out there, get to a quick ROI and really add value to the business.
So Paul, if you want to do the quick math, this is something Andy used to bring up, but we're not relying on displacement or taking the lion's share of an enterprise's software, but rather, and this was the case with the bank that we were just brought in. They tried others. They tried the big guys. They tried other low code. It didn't work. And then we came in. So let me position it from a number standpoint. If you take a look at our objective of getting $1 million in revenue, a recurring revenue per Fortune 500, if you take a look at various third-party research, there's well over 100 mission-critical applications that should be addressed by our digital ledger. We only address 10% of those at $100,000, which I think is conservative per each one of those applications. We're at $1 million. So again, you're not saying, oh, we're going to come in and you got to dump all your SAP or Oracle, but rather those guys aren't doing enough. And so what we're doing is taking a look at only 10%, you're $1 million. Now take a look at $1 million of AR, across the Fortune 500, not including the banks. And you can start to get those numbers, upcoming. This is also why referrals from one CIO to other areas, starts to pull in. And we're at that inflection point overall, where it's not, we have to go out to the front door and knock on it, but rather other people are coming to us saying, we heard your presentation or we heard your solution at somebody else. We need to get you into somebody else. That reverse inquiry is at that critical point. So the other way of looking at it, if people are saying, well, aren't other people using this? The answer is, as far as we can see, no one is using a digital ledger that is at the atomic level. And the biggest problem or competition is the non-invented here, an IT manager who's trying to resolve this. Well, was that require a lot of SQL servers and a lot of SQL query, which they can do it, but should they be doing it as opposed to outsourcing it to us from productivity? So a way that we sort of position with our sales guys and the IT is, don't tell the IT guys they're doing something wrong, but rather like to a doctor saying, you're a really good doctor, but you're only using a stethoscope. We're providing you an MRI machine. Think how much better of a doctor you can be. That's why it's not so much a share of market, as opposed to we're actually expanding the market into this productivity tool that did not exist previously. And credit to our founders. They didn't create a good application. They created a platform, and one that top 5 bank, as well as top financial institutions and supply chain and other Fortune 500s are already using with us.
No, that's really the sense I'm getting from you guys, is that as far as competition, there really isn't any defined competition. There's other things that companies can try to do,
Correct.
But there's no direct competition. Is that correct?
Yeah, I mean, I would say 2 points. One of our largest customers is Ernst & Young. And, EY, and we do a lot of work with Ernst & Young, and they use us internally, but they also use us with their customers. And, they do audits and technology overviews for governments and large companies to say, we're thinking about going with this type of product. What do you think? And they rank them and rate them. Well, they're using us as their in one of their big platforms, right? They're using our technology. So that should act as a validation of not only the quality and the maturity of the platform that we have, but also of the security that we have. When you also look at this big bank that put us through quite a bit of due diligence and had already tried to solve this problem for the past several years with 4 or 5 other software applications and basically failed, it's a real testament to, I think, our technology and our team, where we were able to show them a different path. And this different path is so unique that, we ended up with an enterprise deal across the entire bank. And we really believe that it's an unlimited market for us. Mm-hmm. So to go back to say, answer your original question, say, Andy, how big can this thing get? I always try and chunk things into smaller pieces because it's much more manageable. But if we think about where we could be in, let's say, the next 36 months, we really think we could be on track to be 50 million. After that, could we get to 100 million within a 4 or 5 year period, which is the number that you threw out there, or the time that you threw out there? And we think it's absolutely possible. And we think the technology is unbeatable, and we need to execute. And that's what we're doing.
Mm-hmm. Just a few more questions here, but you mentioned Ernst & Young and some other organizations. When you guys go to sell, where are you finding it's easier to get that customer? Is it through sort of a company like EY or an integrator, or are you guys directly getting your sales?
Yeah, so we have kind of the go-to-market split into 2 different categories, right? On the banking side, we are going through partners and all of the IT services companies, because they have the relationship, they're trusted, they're already under contract, and the banks trust them, right? If I walk into the CIO's office of a top 5 bank in the United States, I'm going to get kicked out. Okay, I'm not even going to get to the front door. Okay, but if we get brought in by a partner, that's where we are there. So that's where we're focused there. On the other side, all the enterprise stuff that we're doing around, again, CPG and bringing in companies like Apple and Verizon Wireless, we're doing that all on a direct basis. And it's very traditional enterprise selling. It's blocking and tackling. It's getting leads from various sources. And it's qualifying those leads. It's creating a compelling reason to buy, and proving an ROI, and closing the deal, and then executing when you get done, and then land and expand as quickly as we can across those organizations.
Fantastic. Well, look, I mean, business-wise and execution-wise, when I look at the numbers, I'm very impressed with what you guys have been able to put together. And if it looks like you're quite confident you can continue on this path, so it looks fantastic. Looking forward, what do you think investors should pay the most attention to? What sort of metrics or maybe even catalysts do you think we should keep an eye out for?
Yeah, well, I think a couple things, Paul. One is that the balance sheet is debt free, very solid structure today. Cash on the balance sheet, which is obviously very important. A clear path to driving toward profitability. But I think the main thing to always look for is, what's that top line revenue growth on an ARR basis? And if you continue to see us, quarter over quarter, showing, proof that we're continuing to grow, I think that's a terrific sign. When someone asks me what differentiates you this year from other companies, when we go and we present in forums like this and at conferences, I say, the stock is up 400% this year in this market. Incredible. We're not raising any money. Cash is on the balance sheet. We're driving toward profitability, and where revenue is growing at a pretty significant pace. I think you put all those things together with a super clean balance sheet and environment and a very dedicated team. I think it's a win-win for success for the investors and for everyone that's involved.
I think that's a very great summary of everything. Is there absolutely anything else you want to make sure everybody walks away with today?
I'd just like to thank everybody for coming on and listening to the story. And Charlie and I are always available, by the way, if people want to individually dig in deeper. We love investors that want to do their due diligence and get in and work with us and really understand what we're doing, because it's quite exciting.
Well, again, congratulations on an outstanding last 12 months here since we spoke last. We definitely want to catch up with you guys sooner than another year from now. So continued success, hopefully, and we look forward to catching up with you guys whenever you see fit.
Great, Paul. Thank you. And thank you, Trevor.
Thank you so much.